Welcome to Bears in Exile. Today is January 31st, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, XOI, and how about GE, and XLF, and who knows what else. Alright, going to have some fun once again. Yeah, last night we were saying that had some trepidation about this candle that we had yesterday. It wasn't clean. We wanted to break and close outside of the short-term moving averages, and we were worried about it coming back up. That was a bad sign. Well, today it opened up and it went up high, and that was the worry from yesterday, and then it sunk all the way down low, and then it looked like, hey, maybe we could get a close below the short-term moving averages, and ended up it on the day right in the middle. What a clean, perfectly formed textbook spinning top, which absolutely tells us very little. So that's not exactly what we wanted to see, but that is what it is. 4 days of red in a row. Does that mean it's going to be begging for a green day tomorrow? It could be, but it doesn't have to be. But nonetheless, candle of indecision. Not the greatest positioning in either direction with the short-term moving averages. We were waiting yesterday for more information, and tonight, waiting once again for more stinking information. Beyond that, we have the 14-day RSI moving average still pointing up, although it is somewhat losing its angle very slightly. Stochastics heading down, CCI heading up, RSI ticking down, histogram ticking down, and MACD ticking down with the bearish cross that we noticed yesterday, really. So, it is mixed. And the candle is mixed. And everything is mixed. So, anyways, just getting a little melodramatic tonight, or ultra dramatic. Alright, SPX, also the same, not nearly as pretty as the Dow, but still the same thing. And waiting for that 14-day RSI moving average to turn. Secondaries, for the most part, bearish, but it is mixed. Be completely honest, it is mixed. And while I am thinking that we will go in for a bar retest, it's by no means a sure thing at this moment. To that end, the VIX. Yeah, it was green today. Very nice. Hammer. Does that mean that it's time to go up for a bar retest? Well, we had uptick. Uptick was met yesterday, and it was met again today. So we're waiting for a break above and a close above the short-term moving averages, which we do not have. But we do have the 14-day RSI moving average still marching on up, along with the stochastics, the RSI, the histogram, and the MACD, all pointing up, with only the CCI in disagreement. So, also to note, we are still below psychologically important $20 mark. So we need to close above $20. It's just that simple. And when, we were saying way back here that to close below 20 was bad news. And when we did get it, sure enough, we had bad news. So we need to get it above it, and then we'll have some good news. Just waiting for that. Just waiting. Instead of TNA, we'll go to XOI. Yeah. Very nicely formed hammer. It is supposed to be bouncing off of the bar. That's what the bar is there to do, to catch things and make resistance and slow things down. And that's exactly what it's doing. Look, it touched it perfect. Bounced right off of it. Yeah, it's a red day. And red day oil, red day for the market. Makes sense. Completely, totally. We can see the middle Bollinger Band getting above the short-term moving averages almost completely. Could be a sign. May not be a sign. Better sign is the 14-day RSI moving average slight tick down. If this sucker is turning around and going to be heading down, that is bad for the market. We also have that with the histogram and the MACD pointing down, RSI pointing down, slow stochastic pointing down, fast stochastic pointing up, so it is mixed. And up on CCI, people buying this thing, obviously, buying this thing. So mixed. We want to see this, we get further crossover of the short-term moving averages and go in for a sit on the bar, that would be completely dandy. That is normal. Normal. Um, TNA. Yeah. I sound like a bull shark. Yeah. All right. We had the downtick yesterday. It was almost met intraday. Actually, no, it wasn't. Had a little bit of room to move, so it still has not been fulfilled. We still have that target right over here at just about 53, maybe a hair shy of it, and ending with a fat body hammer. Um, 14-day RSI moving average still not rolling over. Stochastics trying to get underway. CCI ticking up, RSI ticking down. Finally getting the hook of the MACD. We do not have a cross of it yet, and the histogram is ticking down. I've noticed that this one is very similar at the moment. I mean, this is the Russell, so you know, it's not the S&P, it's not the Nasdaq, but sometimes it follows that very closely, and it is much more like Nasdaq the last couple of weeks than it is the S&P. And the Nasdaq here, yep, hammer, no downtick, a little bit of excessive separation, and no rollover of the 14-day RSI moving average. This has been massively strong, way stronger than the Dow, way stronger than the S&P. This is the one to watch, in my opinion. This is what's keeping the whole stinking market up right now, is the Nasdaq. And you can see the histogram sloping down. We don't have a downward movement by the MACD. We have a slight down movement in the RSI, but stochastics mixed, CCI ticking up. People are believing in tech right now, and but once they stop, woo, like musical chairs, it'll be time to find a seat or not have one. But that's just my interpretation. Yep, when this one falls apart, that's when the market's going to have some real problems, if it's going to have some real problems. Maybe they can prop this up long enough that the rest of everything will, you know, start playing by the same tune, and away we go, and that'll be that. UUP, also major mover of the market. We've been surprised that it has not been able to suck itself back into the long-term moving average bar, and it's not gone yet. It is taking heavy damage. But look at the excessive separation in the short-term moving averages. Definitely a bubble. We finally got an uptick today. We haven't had one this entire time. Gives us a target of about 22.27, which is a very decent move up for a bubble corrective move, which would be sucking it into the bar. So we're looking for that, but in opposition to that, we still have the 14-day RSI ticking on down. Stochastics trying to turn over, RSI trying to go up, histogram ticking up, and MACD not impressed yet, but trying, along with the CCI ticking up. So there's definitely a case for a bullish move in the dollar, at the very least for a bubble corrective move. I think that we're going to see that really soon. I'm surprised that it hasn't happened already, but you know, kind of just have to wait until the chart says, hey, it's time. So hey, maybe it's time. And if we do get that, then it's going to make those spinning tops on SPX and the Dow go down and not up. So very interesting. Maybe this is a tell. Looking for confirmation in FXE, the euro. You can see that, yes, it's doing some damage to the bar, but not nearly to the extent of UUP. We did get a downtick yesterday. Yes, it was met intraday, so this wobble, this excessive separation, that's all taken care of at the moment. We need to see if it can be expelled from the long-term moving average bar. We still have the middle Bollinger Band below the short-term moving averages, so it does have that in its favor. It still has the 14-day RSI moving average pointing up, which is also in its favor, but CCI very high, trying to go down, stochastics very high, trying to go down, histogram sloping down, MACD not yet rolled over, but trying to reduce its angle of ascent, and RSI ticking down. So looking for that ejection, and it is going to be news driven. There's just no two ways about it. All right, GLD, the second VIX. Yep, going on up. And certainly part of this must be due to the dollar and all the damage it's done. We've ended with a hanging man here. Very, very clean. Don't get much cleaner than that. We do have excessive separation in the short-term moving averages. There is a problem here that is normal after going through the bar and going down for a bar retest, and a bounce off is completely healthy, and we in fact want that. 14-day RSI moving average in complete convergence with the stochastics very high, looking for the turnover here. Histogram getting a slight, ever so slight tick down. MACD still pointing up. Flatlining on the RSI very high. Slight downtick on the CCI. Yeah, this has gone a long, long way. And corrective move and a bounce off the bar. That would be perfect. That would be textbook. So hopefully that is going to transpire quickly. Now, if the market decides to tank, dollar goes up, yeah, that's going to put pressure on this. But bad news out of Europe, this is the second VIX. So enough to go down for a bar retest? Sure. And increasing fear, presumably, if the VIX goes up, would also help drive this up. So bar retest and bounce. That's what we're looking for. All right, SLV. Yep, we've got a downtick today, giving us a target of about 31.30. Almost a bar retest, and maybe if the bar goes up a little bit more, that'll be enough just for the bar retest by the time it gets there. Bearish engulfing. Stochastics, 14-day RSI moving average, very high. CCI ticking down. Downtick on the histogram, the RSI. MACD not yet curling over, but it's attempting to. So very similar to gold, and we want to see a retest and bounce just like we want to see it in gold. XLF financials. Yeah, we've been talking about this just a little bit. We did have downticks. They were met, so that's all taken care of. We need to see if we're going to go in for a proper touch and retest of the 200-day moving average. If that breaks, the rally is going to fall apart. Mixed on the stochastics, 14-day RSI moving average still ticking up, angle of descent decreasing, uptick on CCI, downtick on RSI, bearish cross, and underway to the downside on the MACD and on the histogram. So very, very curious. So much rides on this one right here. Ah, yes, we also said GE. Yeah, let's take a look at GE, see if we get any foretelling of the Dow. Would you look at that? Bearish engulfing. Breaking away from the short-term moving averages, appearing that it's going to go in for a bar retest. It does look that way. We can see the crunching of the Bollinger Bands. We can see the middle Bollinger Band getting above the short-term moving averages, which is bearish. And look how strong the long-term bullish bar is. Very great separation. No real wobble in the past few days. Very pretty. Maybe a little bit of excessive separation, but that is just a testament to strength. 14-day RSI moving average we've been watching. This one ticked down. Ticked down again today. Essentially still this big, long area of flatness, though. We need to see it get below the 80 so that it can really get underway. Stochastics on their way down, along with the CCI. Side tick on the RSI, down tick on the histogram, and the MACD. So, bearish engulfing is breaking away from the short-term moving averages, and this one normally leads the Dow. And the Dow is a perfectly pretty spinning top. Then what are the odds that it is going to just cruise on up from this point? I would say that the odds are on the side of the bears. And even with that candle of question mark yesterday, yeah, it's doing what it should be doing. So kind of pleased with that. And there it is. Need more information? We always need more information. And tomorrow's going to be a fun day. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.